Hello, I'm Sandy Chim, President and CEO of Century Global Commodities. We're going through a commodity low cycle against the backdrop of very turbulent global broader markets of historic scale. Although there are reasons for concern whether or not the iron ore sector will go down further with the broader market, there are reasons for optimism. One very important fact to note is the fact that iron ore global supply, although it's global, but its global demand is actually local, because over 70% of the global iron ore demand comes from one market, China. Of course, China is not insulated from international economic forces and has its own domestic economic challenges, but the advantage of being the second largest economy in the world of $18 billion of size, its capacity for growth and the need for physical growth is huge, and it absorbs a lot of raw materials. And infrastructure projects are very effective fiscal policies in difficult economic times, which is all or most countries are trying to do today to go through this difficult time. One recent example for this kind of stimulus program, where China is not an exception, is the recent $260 billion infrastructure project push for just Shanghai after it's coming out of its pandemic lockdown. But think of the scale of $260 billion program or programs in its scale. It is almost half of the $600 billion was put into place for the entire country back 2009 when the international financial crisis hit, when China was only a quarter of what it is today in terms of size. And there'll be more if needed, particularly in China when the interest rate environment and the inflationary environment are low and its infrastructure need is almost endless. And this is the kind of actually programs or situation needed by a capital-intensive industry such as iron and steel, which is the reason for optimism, though prices can be choppy from time to time. Hope you like this analysis. Let me know if you have any thoughts. I'll see you the next time. Bye for now.